The biggest mistake investors are making right now is assuming the next market shock will look like the last one. It won't. 2026 is shaping up to be a year where silver and gold move very differently. And if you don't understand that difference, you could give back years of gains in weeks. Today, I am revealing my final exit plan for silver and gold before the next major market shock hits. This isn't fear-mongering. This is preparation. Let's start with the big picture. Gold and silver are often grouped together, but they are not the same asset. Gold is money, silver is money and an industrial metal. And that single difference changes everything in 2026. In a crisis, gold moves first, silver moves later and faster. That's why silver rallies are explosive, and why silver crashes are brutal. My strategy is built on one core belief: silver is for opportunity. Gold is for protection. As we move closer to 2026, I expect volatility to increase across currencies, debt markets, and equities. Central banks are trapped, governments are over-leveraged, and confidence is fragile. That environment is bullish for metals, but only temporarily. Here's where my exit plan begins. When gold starts making new highs and becomes the headline asset again, I don't chase it. I watch silver. Historically, silver lags gold at first, then outperforms dramatically. That outperformance phase is where most investors lose discipline. When silver starts outperforming gold aggressively, that's my alert phase, not my celebration phase. I don't wait for price predictions. I wait for behavioral signals. If silver headlines start saying it undervalued compared to gold and ready to catch up, that's early stage hype. If silver suddenly becomes the better performing asset and retail money floods in, that's when I prepare to exit. My silver exit happens before the market shock, not after it. Because here is the truth: silver does not protect you during liquidity events. It gets sold, gold gets hoarded, silver gets dumped. That's why my plan is to reduce silver exposure as volatility peaks, not when it feels comfortable. At the same time, I do not fully exit gold. Gold stays as insurance. Silver is where I take profits. I scale out of silver in stages as the gold-silver ratio compresses and media attention explodes. If the gold-silver ratio drops rapidly, that tells me silver is overheating. That's not strength, that's risk. Another key exit trigger is government behavior. When policymakers start talking about market stability, emergency measures, or capital controls, metals spike emotionally. That spike is short-lived. I sell silver into that fear. Not because silver is bad, but because timing matters more than conviction. My final silver exit is not based on price alone. It's based on stress, market stress, political stress, currency stress. When stress peaks, silver peaks. Gold holds value. Silver gives it back. That's why my 2026 plan is clear. Silver is not a forever asset. Gold can be. Silver is a trade. Gold is a hedge. And the investors who survive the next shock want to be the ones who believe the loudest. They'll be the ones who exited quietly, early, and with a plan. If you're holding silver without an exit strategy, you're not investing, you're hoping. And hope is not a strategy. Silver versus gold in 2026 will not be about which asset goes higher. It will be about which asset you exit at the right time. That's my final plan before the next market shock. Plan your exit now, because when the shock arrives, it will be too late.